Hello and welcome to another brand new chapter of Pivot or Perish series where we discuss and debate the key transformations that businesses are undergoing as they emerge from an unprecedented crisis, the pandemic I'm talking about. And today we discuss the energy sector. The energy sector, as we all agree, is among the most critical, and its performance in the foreseeable future is going to decide how the economy performs, how we emerge out of the whole lockdown and the slowdown that things are looking like. So please join me in welcoming our panelists this evening. We have with us Mr. Ashwini Dudeja. He is the country head of Shell Energy India. Also joining us, Mr. Ashish Khanna, MD and CEO of Tata Power Solar. Mr. B. Anand is the CEO of Nayara Energy, and Ms. Vandana Hari, founder and CEO of Panda Insights. Mr. Pramod Agarwal, VP and Regional CTO of Automation Anywhere. And also joining in the show is my colleague and my co-host and our in-house energy expert, Utpal Bhaskar. Without taking more time, let me just go straight to the panel and let's address the issues at hand. Um, I'll keep it very generic. We are emerging out of the lockdown. How is it looking like? The demand, obviously, it was in the ICU for at least 2 months. How are things looking like? Let me first go to Mr. Dudeja, and then we'll go to the rest of the panel. Mr. Dudeja, I think you're on mute. You'll have to unmute yourself first. Yeah.
Sorry about that. Thanks, Devarshi. COVID really, brought some new challenges for us in the energy sector. There was a, lockdown, and because of which industries were not running. There was labor issue, and the demand was really down, and we saw that impact. Starting in the month of March end, and continued till about April. But the good news is that there is some recovery happening with industry starting, fertilizer units starting to consume, refineries picking up demand. So on the gas front, there is a bit of an upside, in terms of demand, and the other associated benefit of this is in terms of the low oil price as well as LNG prices, which makes it even more attractive for Indian buyers. So as far as our industry is concerned, I focus more on gas and LNG. I think there is a bit of a upside now visible, after the COVID related lockdowns in April and May.
Right. No, absolutely. So you see green shoots. I mean, this is. I mean, when you talk about recovery, people always say it's pent up demand. How are we differentiating between what's pent up demand and what is actually green shoot of recovery? Are you making that distinction yet, Ashish? And maybe I can ask the same to Mr. Anand after you. Ashish, if you got my question. I think there is some audio issue. Mr. Anand, you heard me.
Yeah.
Yeah.
Am I audible?
Yes, you are. Yes, please go ahead, sir.
So for us, we have seen this has been a massive yo-yo when it comes to COVID. But in general, when you talk about our business, the refinery, Vandana is there and she'll testify it even more. We have been going through a lot of turbulence much before the COVID began. In context of some bit of a demand destruction, in some context, challenges came around crude. So now coming into the era where we all were in the unprecedented seemed to be the norm, which is the COVID. Definitely, one of the huge paradigms everyone uses is that India is always the center point of core to the fuel demand. That took a massive beating during the lockdown. But to your point, clearly as the lockdown started easing, end of the day, fuel is very strongly correlated with mobility. So as we started seeing some mobility coming into the economy as the unlocks happened, that we started seeing reasonable fuels are concerned, be it in gasoline or gas oil. Of course, during the course of the COVID, because there were these very strong government-supported programs of ensuring that people were getting LPGs, all the food and the kind of fuel was being supplied. So LPGs kind of in some form during the course of the COVID sustained itself. But rest of the fuels we are seeing clearly we are seeing coming. I won't say coming back. It's a cautious optimism in some form, but we are definitely seeing better markers in this as opposed to what it was in the month of April and in mid of May. And green shoots, of course, yes. When we speak about green shoots, as we see more and more industries opening up, because core industries are yet struggling to come to the full capacity. But as we see those opening up, I'm sure we will start seeing some resonance and demand coming back to the pre-COVID levels.
Right. I just wanted to interrupt you. In fact, when we talk about the demand coming back, and 88% is what the ministry has been talking about, but that's government data. So I'm also kind of, and you're a large participant in the Indian petroleum product space. Niara, you have. When do you see how much of this demand you see coming from the rural area as well? Because one of the notions which have been doing the rounds for some time now is that the diesel demand is slowly coming back because of a good monsoon. Is that a fair assumption to make at this point of time?
I think you hit the nail on the head, and probably we may be a bit of an outlier when we speak about a Nayara story, as opposed to rest of the other peers, because the way we are located, our fuel station is close to about 6,000. The way we are located, we are not metro centric. So as you know, most of the demand destruction has happened in the core metros. The government's focus on trying to get the rural quickly back, and to get some of the other areas which are not that affected in context of the COVID, getting them back has been a huge kind of a contributor to our, kind of getting some demand reverts. Uh, so that is where we feel. And yes, of course, monsoon is just begun. We will start seeing better uptakes. Our outlook for the month, as far as diesel is concerned, is that we should start seeing a substantial pent up. And looking at that, you also find most of the refineries, which were previously operating probably at 40%, 50% of their overall throughput capacities, they have started increasing the capacities. So there is a strong belief that this course correction will happen in the course of this next 3 4 months. And moving into the last quarter, definitely we see a substantial pent up in the demand.
Right. Thank you for that. In fact, I just wanted to ask this very quick question to Ashwini. Ashwini, there's a lot of excitement around this gas market now. So we saw a gas section which was recently launched, and in fact, we have been hearing about this gas hub for a long time. I don't know when that will happen. GST is gas is still not under GST. So anyway, so when you look from an LPG point of view, because there was a time in say around early March when we were hearing that some of the Petronet LNGs of the world were looking at getting cargoes which were meant for China here. Now, obviously, even that story has changed a bit because given the interesting neighborhood in which we live. Uh, how do you see the gas demand coming up? And I'm talking about LNG, given that there's a demand for power is actually more or less, I'm talking about electricity part of it, which is more or less coming back to the pre-lockdown stage.
Yeah, absolutely, Utpal. So, in terms of gas for power, that's one of the very important segment. There is, nearly 24 gigawatt of stranded gas-based power, which is available in India. And as the share of renewables is growing in the overall energy basket, there is a more and more need for flexible power. And gas, on one hand is the cleanest fossil fuel, but, it also provides one of the most flexible power generation abilities, which can complement with very well with the intermittent renewables. So and the current prices are of gas are such that probably they can beat in terms of the cost of generation even the coal based power. So there is the global LNG prices has an upside for Indian buyers. Probably a good time for looking up for tying some long term volumes as well. But especially in terms of creation of demand, power sector is one, but there are a number of other things. For instance, the government of India had in the last budget laid down nearly 4,000 crores worth of outlay for tackling the air quality issues in 122 non highly polluted cities. Now this is a good time. We all talk about whether this is going to expedite the whole energy transition journey, or it is going to delay. to me, this is the best time for it, taking some concrete actions in creating, the demand. So the government obviously needs to, do things like GST, to make the exchange more successful. But, there are certain, regulatory and policy asks, which the government should kind of look at, including providing, some support to power, which is based on gas.
Right. Very quickly, I wanted to get Vandana in. In fact, one part of this conversation is all about LNG, obviously, and then we are also looking at transportation fuel. Yesterday, ATF prices were raised. Petrol diesel prices in India have been raised continuously since the time that the so-called unlock one has happened. There's no relief for consumers, but also now when you look at the way that OPEC Plus is their strategy going forward. So what is in store for us?
So good evening from Singapore, and thank you for having me on the show. You asked me two questions, which will probably take us on slightly different streams, but let me address the first one first, which is India. I do realize it's been a bit of a raw nerve. Of course, the press has been all over the fact that prices at the pump are much higher even than back in January, when crude prices were much higher than where they are today. I should have probably posed this question to Mr. Anand. But look, this is pretty much the situation globally, and something that is not as well understood, unfortunately, amongst people, consumers, is that the final price at the pump is made of different components, and the input costs in terms of crude feedstock, the refinery margin, transportation is only a part of it. Various duties and taxes are a big part. Now, it so happens that in India, that is a relatively bigger proportion of the final fuel price. And as probably our viewers know well, the Indian government raised taxes on diesel and petrol in the past few weeks. So as a result of which, that more than compensated for the drop in feedstock costs. Now, my personal view on this is, it is a complex matter. Basically, what it boils down to is that as a government, of course, and as policymakers, you need to decide whether you want to, what proportion of the advantage of lower international oil prices you want to pass on to the consumers. Now, and also it's a very economics driven argument as well. The government is taking more of that advantage right now by increasing the taxes. So really what it means then is that the government is saying that we will put this money, or rather it's committing, or ought to commit to putting that money to better use than if it were to be left in the pockets of the consumers. That's in the end, that's what it boils down to.
It's an interesting argument, but yes.
Yes, so perhaps we could talk for hours about this, but let's move on to OPEC. OPEC has played a very key role for the past 3 years, I would say. So again, our viewers will recall the price crash of 2014 to 2016. It was obviously not as bad as what we've seen this year. But nonetheless, it rattled a lot of producing countries. And, OPEC was in a dilemma, whether to continue cutting back and letting shale flourish as a result or not. And ultimately, they took that very difficult, controversial decision to regroup, in fact, with non-OPEC and to reduce supply. And we saw a very steady rise in prices from 2017 as a result of that. We saw a dramatic collapse of that OPEC, non-OPEC alliance in March this year, but they have again regrouped. So as things stand now, what COVID has done is, because of this unprecedented destruction of demand, and we're getting out of that destruction, but it's still substantial demand that still remains disappeared, up to 10 million barrels per day, or 10% of global oil demand, even at this point of time, has not come back. What that has done is actually it has given a lot of power over prices and over market rebalancing to OPEC. And they have risen to the occasion, as I see it, cutting back 10 million barrels per day, nearly a quarter of production for every single participating member of the 23-member alliance. It wasn't a mean feat. They've also delivered amazingly well on that. There was a lot of skepticism that they would be able to comply with those kind of massive cuts, but they have managed to. And the combination of OPEC, non-OPEC cuts from the start of May and the easing of lockdowns and a slow revival of demand is basically these two factors have combined to push prices up from the start of May that we have seen.
Right,
So
right. Thanks for that. In fact, I wanted to bring Ash. Sorry, Devashi, you were saying something.
I'm sorry. I wanted to actually bring Pramod in on that note. As things kind of emerge from where they were 2 months back, one thing that everybody's talking about is improving operational efficiencies. I mean, things really cannot work the way they were, especially in the government sector. If you look at, there's a lot of talk how it has to be far more efficient than what it was, because you're talking margins here, you're talking minimal human intervention here. There's a health aspect to it till the time there is a solution to the whole pandemic. There's a vaccine. How is automation? How important a role automation is going to play out in all these endeavors?
Well, thank you so much, and good evening to all the viewers and my fellow panelists. I think we are seeing very interesting trends when we look at serving the customers. And I think if you look at the customer, the way they want to be served from a contactless perspective, the fear of the disease. So you're thinking about, as a business, how do you really redefine the customer experience? Whether it is at the pump, at the retail shop, at an auto shop, right? Everywhere you have to think about how do you redesign these customer experiences that are responding to this new demand around serving customers. So that's one very clear trend around redesigning the way you serve the customers. Now, on the operational efficiencies part, we are seeing, obviously, bottom line, the importance of that never goes away, right? So whether it is pre-COVID or post-COVID. So in that area, we are seeing, whether you look at HR operations, finance operations, supply chain operations, whether you look at these IT aspects or whether you look at operational and maintenance aspects, how do you redesign these systems, these processes in a way that become not just contactless, but also friction-free? And when they become friction-free, they can deliver you the kind of business agility that you had always wanted. And I think COVID or no COVID, it was always important, but I think it has become far more important now, given that you need to deliver on these promises of digital through this practice of automation. And I think that's where we are seeing most demand coming in, where businesses want to engage with us in really transforming the way they have been working so far, whether they're customer-facing operations or whether they're back office or really operational from an infrastructure maintenance perspective. So we have customers all around the globe. Some customers are simple things like billing operations. If you reduce the errors in the billing operations through automation of whether these are cognitive aspects of understanding documents, understanding emails, you think about understanding contracts, and you put together all of that information in a way that makes sense to your processes. And once you lay this layer around this process orchestration, which is fully automated on top of your core systems, you can then deliver an error-free operation. And if you think about a simple thing like billing, when you reduce billing errors, it not only impacts your customer satisfaction, but it also gives you much better cash flow, right? So if you think about squeezing the last drop of oil, I think this is it, right? So every operation, once it becomes agile, once it becomes almost like service oriented, so you can push a button to increase the number of operations in response to your demand versus if you want to scale it down. So the agility helps you make that happen. And I think that's where we are seeing a lot of interest in automation, not just about efficiency, but also about agility in carrying out your business.
No, absolutely. No, so billing, by the way, in Mumbai is a very sensitive issue right now. Power billing, reading in the newspaper. Let me just get Mr. Khanna in. He's just joined us. He was having some technical issues. Sir, welcome to the show. For Tata Power, again, I'm not going to the billing issue. I'm just talking about operational efficiencies in the current situation. How are you transforming yourself? So I think you're on mute. You'll have to unmute yourself. Uh, Probably there is a mute button on the below the screen. You might have to disengage that. We'll come back to Mr. Khanna in a bit. I think again some problems. Um, Mr. Anand, how are you approaching this? What kind of efficiencies are that you're looking at?
So COVID tells us two things, right? One, it tells you that an energy is still will be a very important part of your life, because even in lockdown, the consumption of energy was something which was very imminent. So which tells you it's there to stay. The backdrop to that, of course, is previous year we all spent talking a lot around the alternates, about the flying cars, the batteries and whatnot, and is the peak oil over? So those are the kind of conversations. But again, this calamity taught us one thing: energy is there to stay. The other important part, to Pramod's point, is that it also tells you and reinforces the fact that technology is a very important. Digitalization is no longer a luxury; it's a necessity, which every organization, every industry, every even oil sector has to embrace. And that's what I think has been the best learning out of all of this. The fact that so many of us, while having this responsibility of working from home as an essential services, technology played a huge game in this to make sure that things worked in a seamless fashion. Today, the fact that we're having a great conversation like this, not in your studio but in our respective homes, is a great reflection of how technology, when invested, what kind of returns it harvests for us. So the journey forward is going to be substantially around that. The context that you put in today, which is a pivot or perish, you have to embrace technology. You've got to bring in automation. You have to understand how to digitize. I mean, for us, right from the refinery, we're trying to understand how we can digitize aspects, the new version of 4.0, how we can embrace there, and into the corporate office as well. And so in that, I'm sure companies like us and many others are investing substantially in making sure that you're gathering maximum efficiency by this. The other important part, as far as our industry goes, especially, is that the last 8, 9, 12 months have been a difficult period, which then enables many of us in our sector to introspect our costs, streamline our operations, bring in more and more efficiencies, because this is a century-old industry, so has its own sets of norms, mindsets. So all that is going in for some kind of a recalibration, if I can use that word. And everyone is very open to accept that there will be a new order post the other side of COVID, that we will see a very new order emerging of how we all kind of embrace our opportunities around us, how we make sure that we engage beautifully with all the tools, the new tools which will come our way, be it in the upstream side of the oil or be it in the downstream side of our business. And yeah, that's what we see as core learnings coming out of this scenario.
Absolutely. Mr. Khanna, if I can come back to you again, the same question that I was asking you. In the situation that we are all facing, how is the transformation, the digital transformation happening for Tata Power?
No, I think the digital transformation was happening for quite some time. It's only now we have been actually able to realize that how good it was. At that time when we were making plans and investing into technology, they were with some perceived notion of the profits it's going to generate on various situations. This is where the reality has bite us and has bitten us very badly. And I think the realization that those investments have paid out on so well are going to transform into now our initiatives, as well as the exuberance of investing more and more into the technology part of it. I think those technologies were also available. It's not that we were reinventing the wheel or we are trying to innovate out there. The only challenge which was in the past is in this highly regulated, but I would say cost-effective industry in which we are in. Is it worth investments on those particular technologies and digitization, which has paid us now very well? So the results are there with us. Each one of us strategy as well as the business plans have now taken into consideration more and more investment into it. And it is not only investments onto, if you ask me, the billing cycle or the efficiencies thereof. I think that is only the last mile connectivity. Important factor is how we build our projects. Important factor is that how do we operate our projects. Important factor is that how do we transform that power from the projects to the homes. And in all these areas, technology is very important. We only showcase the technology which is in the billing cycle and the operational efficiencies coming out from there. We leave where it matters most. That is how we can operate our plants with the minimal manpower which is required generally, or what we are used to, or even permitted by the regulator. Can we reduce that? Of course. Now we have certain plants where we virtually intend to be with 1 or 2 guys running a 100 megawatt plant on a renewable sector or otherwise too. Can we build a plant with more and more technologies into it and mechanization and make it ring fence so that there is hardly any migration to or from those areas? That is also possible, and we have invested it in and finding the results. So I think there is a spectrum which we were using in the past, but selectively in infusing the technology and digitization. In the last few months, we have, enlarged that canvas. And now we have realized the advantages and are putting more and more investments now.
If I can ask you, sir, I mean, you mentioned that you, and of course, I mean, Tata Power has been investing in technology. Let me take you back in time a little bit. Do you see, when you look back, do you see any skepticism? Why must we put so much money in technology? And of course, I mean, the good people who decided to invest have all been proven right and how with the pandemic. But was there any hint of skepticism in those days?
I think it is not a part of skepticism out there. It is always a difference between the Excel sheet PowerPoint to the reality of life. What was projected in the assumptions, are they giving the predictable returns or not? That's always a question which is posed. And we are nowadays the master in power, but more and more the new generation is a master in the PowerPoint too. So they take you out with their assumptions and bring out those factors which can help you a lot at that time. Coming from the industry which is pretty old, you always have the suspicion in its mind is how much of it is reality and how much of it is the risk which we are going to take across there. I think that has gone off. That confidence which was there for a perceived situation, looking at the advantages which in this current situation we have derived, that has gone off. Like I said, all technologies were available. It's not that now we are reinventing the wheel. I think it is only our investments of the past which has paid us now very well. It was paying us earlier too, but to the extent which we are taking advantage in the current situation is unprecedented. None of us has actually invested in technology considering pandemic into a consideration as a business continuity plan. But even in this situation, it has paid off well is something, if you say in a cricket-loving country, we were looking for a 5-day match, but even on a 2020, the batsman has played very well.
Absolutely. I mean, I'll go to Pramod quickly, and then it's over to you, Utpal. So Pramod, this pandemic is going to be a reference point for all the customer engagements that you're going to do, or you're just going to tell them no, we'll anyway help you transform with or without a pandemic. What is the conversation going to be like going forward?
I think what's happening, just like Ash said, the conversation is changing. Right? There is a confidence in the output of the technology. Right? There is no question about that these investments are going to pay off in the long term. So that's the most significant we are seeing in the C-suite with respect to buying technology. A couple of points I can make in addition to what Ajit. If you look at our workforce today, it's highly technically educated, right? And I think for the better, didn't recognize that the workforce has really transformed through last 20 to 25 years of investment technology that organizations have made, and especially the energy sector, which I think is also been at the forefront of technology, whether it's in the SCADA systems or operational systems or IT system. But I think what is happening today is that you can use this new capability of automation and digital tools that this workforce, which is technically competent, can very easily use the business objective that you want. So I think in that sense, there is almost a cultural transformation around technology that has happened. And I think that is driving investments into technology even more. The other thing I can say is that because of this and because of this awareness of technology and workforce changing, especially the millennials, what we're going to see is that the return on investments from these technologies is going to be much, much quicker. So, as an example, lot of our conversations today are about what's really the ROI or the TCO on this side. And when you talk about automation and digital and analytics and AI in the context of 12 to 18 months to 24 months, I think that's where the technology is showing that it can really deliver value at the point when you really need it, right? So I think that's the change that we are seeing in the mindset.
I wanted to ask this question to Vandana, given that, which we have seen here in India at least, is that the conventional playbook for electricity, which was always thermal, that part of the plants, it has absolutely, the renewable has played a very stellar performance in the last 3 months. So if you look at the way even the tariffs have behaved, also because we just went through the last 2000 megawatt, which was auctioned, where we saw around, say, uh, India actually hit the lowest solar tariff. That's one part of it. The other thing is also about the way that even in the merit dispatch orders, it was renewable which were priced very low as compared to conventional power projects. So do you think that absolutely that case for renewable, that like we have passed, we have absolutely uh, put that to rest, that entire debate which used to happen at one point of time, whether green is more say renewable or wind versus a thermal, and also I'm not even getting into the environmental aspect of it. Has that debate been laid to rest during this pandemic, and renewable is the new energy form going forward?
I think what's happened is that the debates have shifted. Basically, the point of views have moved, and the content of the debate has shifted. But this will remain a very debatable topic, and here's why. So, first of all, the energy transition. In terms of especially countries like India, where there's a huge dependency on oil imports. So the energy basket has to be diversified. Also, when it comes to energy security, if you are, the more renewables you have in your mix, the better off you are, because everybody has been blowing, and well, India certainly has, and the sun shining down. What the debate is not about anymore is that renewables ought to be in the mix. I think that from an environmental perspective, from an energy supply basket diversification, energy supply security perspective, all of that makes sense. The progress in the technology and the subsequent drop in costs has obviously delighted countries, and it has helped propel them in that direction as well. I think the debate today, and it started a while ago but continues today, is that the fact remains that first of all, electricity consumption is on a very steep upward climb. Unlike oil or other fossil fuels, we know the world electricity consumption is going to continue rising at quite a steep pace for the years to come. Now, when it comes to renewables, renewables are growing very fast, but quite often what the headlines miss, when you look at double-digit growth year on year, is that it's coming from a very small base. And that is a constraint that will remain in renewables. So the debate now is that, yes, countries should absolutely should try and have as much renewable as possible in their power supply, but then it cannot be your base power supply. When the wind doesn't blow and the sun doesn't shine, you still need to fall back on conventional energy, whether it's coal fired or hydroelectric and so on. So that's where the debate is today, and I think we should dispel this myth that some people believe that perhaps we can just accelerate the world's move to complete renewables. No, I mean, I really don't see that, certainly not in our lifetimes, that we go from dependence on coal, hydroelectricity, or nuclear to a heavy dependence on renewables. And then storage, of course, and intermittency are issues as well.
Absolutely. In fact, of course, it cannot be a binary issue. I wanted to get Ashish very quickly on this. Given that, as we are discussing about how renewable has kind of, when you look at the merit orders, where renewable has been priced lower than conventional, as well, even some of the NTPC plants as well, which have always been the kind of a barometer for the lowest energy of electricity available in India. It also comes at a time when you have been hit by a basic custom duty. How is this given that, how do you balance, and given that there was already a pandemic where you have been trying to get your playbook right. Now you're also talking about a policy intervention which is happening, where they're talking about a custom duty. There are tariff barriers which will be coming up more so going forward. Tomorrow is the state power ministers conference as well, and I believe there might be something else which gets announced. Ashish, how do you see this renewable as the main thrust area for the of the playbook for energy firms going forward?
I think the not so good. The good thing which has happened is that renewable has come on board very quickly. Maybe because the base was low, but it has still come on board very quickly. Not so good which has happened is that it has taken all the optics, and because it has taken all the optics, now rather than all energy source aligning with each other, it has become one versus the other. So it's coal versus renewable rather than coal aligned with renewables out there. I think both are required. Technology today is not sufficient enough for an in-firm power like renewable to be sustainable for 24/7. But if you look at the technology leapfrogging which has happened in last 10 years, in 1 or 2 decades, I think it is possible. At least in my lifetime, I'm definitely going to look at a 24/7 solution coming from a clean source of energy, whether it is hydro, wind, or solar per se. I think the catch here is the optics of solar. The optics of solar is also being substantiated by the advancement in the technology in last 10 years. The tariffs have been reducing not because someone is punting. We do see forces being changing or ring fencing the Indian manufacturers. They are a short-time phenomena. And if you look at it, what is the right tariff also is, again, the jury is still out. Whether it is 2.36, 2.37, I think there is too much which goes into this optics of 2.36, 2.37, 1 cent, 4 cents. Important factor is that, do I have a renewable which is cost effective, which can be in the grid? The grid can sustain that power along with the other base load, and everyone can coexist and give a least cost of power as a source of energy to a consumer. And in future, sorry,
please go ahead.
And so this energy has always been politics. So you will always have these statements which will come across on something or the else. Sometimes you have custom duties. Many countries have that. They import barriers to encourage manufacturing. I think we have to look at it. In last 10 years, been unprecedented. You can't take away that credit away from the country, where we were 2014 and where we are at 2030. Where we will be at 2030, again will be unprecedented, as where the exuberance and the investments which are coming across the world. I am not only speaking about India, but I'm talking about across the world. So I think these are a short-term phenomena. These are a very short-term phenomena. And on a long-term perspective, there is no reason why renewable, where the technology is coming. Let's also understand this fact that there is a variable cost in whether you have a fossil fuel-based plant. We own them, many of them out there. The variable cost has been taken away in case of renewable. So it's only the fixed cost assets. And if you improve the technology, it's only going to go down. It's not going to go up.
Right.
So in my view...
Sorry, I interrupted you, but I wanted to very quickly slip this in, because so are you talking about this round the clock power bids which are now coming? We recently saw a couple of them, and then I'll quickly go to Ashwani, because gas will then be that transition fuel for this. Ashwani and Mr. Anand, for gas being this transition fuel to taking us on that trajectory. So very quickly, so is this round the clock is what you are hinting at?
I think the round the clock will come. The current opportunity which is there on the table is predominantly to take care of the stranded assets. But in times to come, I think it's a great way to bundle the renewable power along with the fossil fuel power and reduce the cost. And both have their merits to be in the grid. And the grid, we have to invest in the grid to manage more and more renewable power, which is coming more
Which
cost effectively than the fossil fuel.
which we saw happening in March when we were lighting candles. And also, lastly, on the 21st, when we saw that solar eclipse, when say around what, 12,000, 13,000 megawatt was quickly went down and got ramped up. So I think the grid issue has more or less, we should at least give that kind of a credit to the POSOCO that from what it was, I still remember those terror days of a grid failure. I'm talking about when we on 2 consecutive days when around 600 million odd people went without electricity. I wanted to get. I actually wanted to get Ashwini in and Mr. Anand. Sir, as Ashish has very nicely framed this about how going forward also in a post-pandemic world, it's both conventional and green and clean tech going together, and that's also Ashish one way of the politics of co-opting different energy sources. But I just wanted to put this in front of both of you, Mr. Anand and Ashwini. So, is gas the fuel which will take us to that round the clock clean energy trajectory? Given that it can be ramped up very soon, you don't need a time required to light up a boiler. So, is gas the intermediary fuel which will take us to that trajectory?
So let me take this first, Utpal. So yeah, you are absolutely right. And as Ashish has said, one of the important thing to note is that the renewables are intermittent in nature, and we do need some complementary source of power along with that, whether it is storage or a complementary power generation, flexible power generation through gas is a question which time will tell. But based on some of the analysis work which we have done, and we've seen some of the consultants making presentations on the subject, is that gas based power is more complementary and competitive compared to storage as of now, and can provide a very neat solution for round the clock power. And some of the recent bids which you mentioned, are actually currently most of them have gone along with hydel rather than or to some extent coal, but rather than adopting gas as a complementary fuel. But I think the penetration of renewable is increasing. Currently it stands at about 9 to 10%. And as we have seen in some of the developed countries, where when they start going above 12, 13, 14% kind of in the generation mix, there is a significant imbalance which you will see. We already see that some of the southern states in India have experienced the grid balancing issues because of very high penetration of renewables. So what do? The country has 24 gigawatt of stranded gas based power capacity. And there are certain policy measures which government of India had taken in past. Some of those can be restored. That's point number one. But even in the long term, I think it makes a lot of sense, given the current LNG prices, to make it much more complementary and effective. And while we are talking about it, there is probably a need for something like a solar. There is a solar and wind solar and wind combined hybrid policy. Something on the similar line should also be done between solar and gas. And that's something which will really give an impetus to gas based power. So that basically provide a very nice platform for graduating from or increasing the penetration of renewable from the current 9-10% to whatever 20% or targets which we have in the long term.
Right. Mr. Anand, your views on the subject?
Well, I did do all that. First of all, to Ashish's point, and that's been my reference point as well. While he's been selling electricity, we have been selling oil, saying that the basket, energy basket, there's enough for all. It'll be a coexist model. Clearly, what will drive most of the choices would be the economics. End of the day, there is the gap is increasing in context of in at least Indian context of what the demand is versus where the supplies are, and out there, economics mostly drives. For instance, to your point of all the renewables, clearly, and that's been the government's also biggest focus is to see how they can substantially step up the efforts around gas, because gas is a natural kind of the alternate around the renewables, given the fact that we have invested substantially to connect it, which is the grid is a very important part to it. We already have plentiful of power plants which are mothballed right now, which were earlier based on gas. And the reason they are mothballed clearly is because economics didn't support them. So economics would drive. Today, of course, the kind of prices that we have on gas makes it very compelling for many to kind of look at gas as a medium. But eventually, I guess once we get those right infrastructure in place, because we have the demand as far as India is concerned, we have the pockets of supplies. Gas hinges on the very important connectivity logistics for how to bring the gas to us, and including the liquefaction or the regasification, the economics associated with it, how we manage it. So yes, I mean, India continues to remain long on gas. That's the biggest bet India is making. And I believe there is enough for all in context of the energy pie to make sure that all coexist. But eventually, in Indian context, given the kind of penetration we desire, energy penetration desire, it's the economics which will drive the choices.
No, that's a very valid point. You mentioned the regulatory aspect as well. So a lot of corporations, this is not necessarily just the power sector. How do you price risk? In various ways. You evolve for power gen. Many companies are seeing something unfolding in Andhra Pradesh, for example. We're all aware of the court case that's going on there. Going forward, how are big corporations like yours? They're going to sort of price that in every aspect of the business, not just the final product, but the way you're investing, the way you're setting your outlook, and things like that. So Anand, if you'd like to answer that, and then I'll go to everybody else in the panel as well.
Sure. So two parts to this. One is eventually, you have to be driven by what the customer needs, customer requirements are. We began, conversation on COVID and the disruptions. So going back before COVID, one of the biggest discussion points were how the consumer is going to evolve in context of his choices of energy. So in our so in that context, each of the company will also in, in it is to, wherever they say synergies, they need to kind of ensure they pick up those synergies and diversify. So diversifying your energy basket is the first way you de-risk yourself, because one doesn't know 20 years, 50, because these are all high captive industries, right? So you invest substantially in billions of dollars when you set these industries up, and you're obviously looking for an economic life of at least 25 to 30 years when you invest in billions of dollars. So out there, the de-risk strategy for you, depending on how you see the world emerging in front of you, is how well you can diversify. So today, if a refinery in an asset in our asset class, if there's a refinery, maybe they'll just not stop by saying the product yield has to stop at making only diesel and petrol. They really want to go more downstream. They want to build up like the many others are doing now, moving into the petrochemicals, and in the petrochemicals like Shell and many others have done into more value added kind of chemical streams. So that is the way I think our industry will de-risk itself, by diversification, by adding more value, by going in for the last value molecule of be through cracking or the different sets of technologies of bringing different sets of products to cater to the customers. We clearly understand and appreciate that this market will be very different 10 years from now in context of what choices the consumers may want, what kind of stipulations regulators may put, and what kind of, many of us have this other challenge of how do we move into a net carbon, zero, or we are tending to a zero kind of a strategy and mindset in 15, 20 years from now.
Pramod, do you want to go next about this? How are you advising your clients to basically keep these factors, while they're deciding on key business decisions, whether it is capex or digital transformation or any other aspect of the business? Pramod, this was for you. Pramod, can
The
you hear me?
audio was not very clear for me.
No, I'm asking the same question which I asked Mr. Anand. When you are basically advising corporations, to basically, manage, and forecast, what are the key factors, risk factors which are going to play out? What is your observations? What are you sort of hearing and what are you advising?
So I think from a technology perspective, when we talk to customers, I think the key thing here is how do they respond to this world? And as Mr. Anand described, the energy mix is changing. In 10 years, we may be at a very different place where we are today. You look at decarbonization, decentralization of energy generation. You look at consumer becoming producers in many cases. Though, how do you really then think about this demand projection and how do you respond to it from a technology or systems perspective? And I think this is where we are seeing that customers want to get ahead of the situation where the world, I think, in the next 10 to 15 years is likely to be very, very different, right? I think they want us to focus on solving this issue of how do you tackle this dynamism in demand in a production systems, how do you match and map the whole thing together in a way that you can constantly serve this changing demand, right? And at the renewables or the other kind of carbon-led energy generation systems, they all have very, very different characteristics. So if you think about how do you bring a stable demand and put it in front of the customer in the most cost-effective way, that's going to require all of these systems, which are maybe backward-facing and the forward-facing to work together to create a system which can respond to this emerging need. And that's where we are invested quite a bit with a bunch of energy producers and distributors around the world. Companies like IOC, ONGC, Schlumberger, right, Caterpillar in manufacturing. So there are customers who are essentially grappling with the same issue in this uncertain world, and we need to build systems and technologies that can be very, very, very responsive to them. And I think that sort of comes back to the whole idea around business agility. That can you deliver that business agility that can truly serve this dynamic and changing world going forward?
No, absolutely, I agree. Vandana, you want to answer that? What are you telling corporations?
Yeah, sure. So there's two kinds of major risks facing the energy sector globally right now. One is obviously a very immediate risk, and which has been caused by COVID, which is merely of survival. In the once booming shale sector, we are seeing bankruptcies of companies that were pioneers of the shale revolution. There's a lot of consolidation that is likely to be forced on the upstream as well as the downstream industry globally. So companies are coming out of this, irrespective of which part of the value chain you are in, they're coming out of this crisis with considerably weakened balance sheets. There have been major asset write-downs. You might have seen BP and Shell writing down billions of dollars of assets. Now, in the short term, of course, there'll have to be a lot of capital discipline. There'll have to be cost cutting. When it comes to cost cutting, again, I think there's an easy way out, the obvious places. But I think companies perhaps need to be a little more thoughtful about this. Where overheads? How about working from home? A lot of companies have found that a lot of processes and systems could continue smoothly with people working from home. Could they maybe reduce their overheads on office space? And I think there's a little bit of creative, imaginative thinking that's required when companies sit down and think about cutting costs. Also, as we've been talking, how it's not just about cutting costs, but about driving efficiencies in your operations, which will stand you in good stead for future. Your asset base, companies, the really good, strong companies globally are taking a very hard look at their asset base. Are there any structurally disadvantaged assets? Are there advantaged assets that they'll want to hold on to? There are M&A opportunities. It would be wrong, again, to just dismiss it as, we have no money right now. There is still, of course, capital is constrained, but there is still capital available. There is investment available for companies that can promise a return on investment. So, how can you do that? How can you ensure that you remain relevant? How can you ensure that you be cost competitive? And then you will have some investors knocking on your doors. A great example in recent days has been the Abu Dhabi National Oil Company. There is a new breed of investors out there as well. It's managed to attract a lot of not just the recent deals, but even over the past couple of years, pension funds, hedge funds wanting to take a direct stake in its pipeline infrastructure, for instance. So there is capital available. How can as a company you tap into it? So I think all of these things are basically companies are now being called upon to do some bold action, to visionary thinking, restructure their business models, ensure cost efficiencies and so on. The longer term challenges will remain as well beyond COVID. And those are, when does the global oil demand peak? So it's very important for especially oil and gas focused companies to see how they can reinvent themselves. Can they start investing in energy transition and in future energy? Investors, shareholders are scrutinizing companies' own carbon footprint, and a lot of attention is now going to shift. So it's not just about the emissions at your car level or power plant level, but also all the way along the production to the refining and transportation. So can companies become more environment friendly in all of their processes? So all of these are longer term issues. Petrochemicals is an area which may remain bright in terms of demand growth for years to come. So we already see oil and gas companies starting to look at that as well. So you'll have to essentially look at all of these things to future-proof your business if today your revenues are very heavily dependent on oil and gas sales.
No, sure. No, we are almost out of time. But before we wrap up, I want to go to two big deal makers who are sitting with us here, Mr. Khanna and also Mr. Anand. Tata Power has acquired very aggressively in the past. Naira Energy is the product of a big acquisition. How are you both seeing the opportunities in the current crisis? I'll go with Mr. Khanna first, and then I'll go to Mr. Anand.
I think, if you are working on your core competence, then the opportunities will keep on coming. The point is whether you have an opportunity which is a stressed asset and you can make something out of it, or you just need an opportunity to make yourself big. I think there will be a consolidation in the industry, at least where we are in. And this consolidation will definitely bring opportunities for many players who has made a business model not on a long-term perspective, but on a short-term perspective. Having said that, these opportunities also comes with a lot of risk. When you have set up plants, only if you have set up plants with a short-term perspective, then there is so much which is under the earth or outside, which is very difficult to be measured as a part of the risk and the cost which you are going to pay across on this. So I think all these opportunities bring their own foray of risk along with it. But I do foresee that in this liquidity crunch, in this policy framework, and also in the competence of the companies to go forward, there will be a lot of opportunities. We are not a deal makers or a breaker in that sense, but I do foresee that as a company with deep pockets and which are there and work on their core competence, there were opportunities, there are opportunities, and there will be opportunities. They are there always.
Of course. Mr. Anand, opportunities for you in the current situation? I'm sure there are many.
Yeah, sure, Dave. Sorry, I just missed out on hearing Mr. Ashish's comments. That seems to have some lag on that. But yeah, coming to us, as far as we are concerned, when we invested into SR Oil to make it Naira Energy 2.5 years back, nearly 3 years ago, the quintessential bet was India, and that the excitement that the India demand, and the growth opportunities that India presented, I think all that still continues, albeit right now we're going through a very tepid scenario. It's no longer a 7%, 8% GDP kind of a growth or a fuel growth economy, but we believe that this is short-lived. The blip that we have, India will recover well. out of this situation. But we remain very, very buoyant as far as India is concerned on its energy requirement on the long-term basis. So for us, we are still very excited about having acquired this asset, operating this asset, and believing in the growth of this asset and in the landscape.
Thank you. And on that very, very positive note, very optimistic note, we'll say goodbye today. Thank you, everybody, for joining us. Look forward to having all of you again soon. Goodbye from me, everybody in Mint, and also from Utpal. Thank you so much. Thanks a lot.
Thank you.
Thank you.
Thank you.